Boom! We are live on Facebook Live. We are live on Instagram Live. And we will be going live here in a minute on the radio. Today's show is going to be the big one. Should you have earthquake insurance and how to prepare your home? So we're going to get it dialed up here in the studio. You guys can't hear these fabulous sound effects, but that's okay. Should I go glasses, shades, or no shades today? What do you think? Should I go aviators? Hold on. I don't know. I think I don't like it. I like it. Can I still read? Yeah, we're going aviators today. Woo! I love it. All right, so my man in the booth behind the glass, the one with all the class, my man, the one and only Billy Joe, is going to spin us up for the radio. All right, are y'all ready? We're going to get going. Let's get it started. We need some bumper intro music. Hey, good morning, everybody. Wow, we're having technical difficulties in the studio. I just completely knocked this microphone off, so I'm just going to hold it for a second until we get to the first break. Yeah, we can restart. Let's do a restart. How did that happen? Oh, there it is. I got it. I got it. I got it. Go ahead. I got it. We just got going.
Yeah, you got it.
That's dirty. That completely just popped right off. We're going to do a restart to the show. We don't need the intro music. We'll just go right into it.
Sure?
All right, we can play it. All right, we're going to do it again. Boy, that was funny. The microphone just went, boop, I'm done. Blooper of the day. Anyway, I know we're a little late, but we're going to rock and roll anyway. Am I crooked? Am I crooked? Doesn't matter. It's all lovely. It's all good. Hey everybody, welcome to the show. Welcome. Thank you for joining me this early morning on Saturday at 8 a.m. I know you guys have plenty to do today, or you wouldn't be up so early, or maybe you couldn't sleep last night and you decided to get up and listen to my show, The Real Estate Connection, here on KFAX 1100 San Francisco, where we talk about real estate related things and issues. Last week's show, we went through probate. We kind of went through the details of probate and what are the duties of an executor and things like that. So I decided to keep it kind of, technical. I'm going to keep it technical this week as well. We're going to do something that came to me because of events that have been happening here in the state of California. Today's show, and the topic of today's show is the big one, and should you have earthquake insurance and how to prepare your home. That's right. That's what we are going to be talking about today. So welcome to today's show. I hope you are having a good summer and you're enjoying a nice cup of coffee this morning. Thank you for joining me again. Really, I've been playing this bumper music, Our House in the Middle of the Street, but today's show theme music should have been Shake, Rattle, and Roll. Ba-dum-bum. Anyway, what's been going on in the state of California with the recent 7.1 magnitude earthquake in Southern California has the big one on as a topic of conversation yet again. That was the largest earthquake in the region since 1999. So in the state of California, when we're talking about the big one or the big earthquake, the thing that people fear, the seismic activity or the seismic event that could cause major damage, we are talking about an 8.2 magnitude earthquake or higher in California along the San Andreas Fault. So if something like that happened in this state, 8.0 or higher, then we would be looking at a major seismic catastrophe, especially here in the Bay Area. And it's something that's on our minds again, as we have seen this recent earthquake at 7.1, only 0.9 away from an 8, down in the Southern California area. And what was that called? I forget the name of that area. But anyway, I looked it up and then I didn't write it down, so I should have. But that is what's brought this topic up today. So I don't know if you guys remember where you were on October 17th, 1989 at 5:04 p.m. when the 6.9 Loma Prieta earthquake hit the San Francisco Bay Area. But I do. I remember. That was in 1989. I was coming back from San Jose State University, and I was driving in my car, and I was listening to the World Series between the Giants and the A's on another local radio station. I think we all know who that is, that plays the San Francisco Giants. It still does today. And I was listening to the commentary when all of a sudden it felt like the axle in the back of my car was sliding back and forth out from underneath me. And I'm like, whoa, that's tripping me out. What's going on? And I looked up and I saw light poles waving back and forth, just swaying. And then I heard a crackle and another crackle of the radio. And all of a sudden my radio signal was gone. It was just gone. There was nothing. I had pulled over to the side of the road with a bunch of other cars. And we just sat there until it kind of stopped. Well, I continued on my journey to my final destination, and along the way, I noticed that there were traffic signals out everywhere. It was around the commute time, so there were lots of people on the road, right? And when my radio did finally come back on, they were talking about the Bay Bridge collapsed, and there was a massive earthquake. Now, back then, we didn't have cell phones. We weren't able to just go online and instantly hit Instagram or Twitter or even Facebook to get pictures of what the Bay Bridge collapse looked like. So in my mind, I pictured the entire bridge in the ocean. It was crazy. I'm like, what? The Bay Bridge collapsed? No freaking way. There's no way. That's impossible. Later on, when we did finally get television signals up and running, we saw that it was just a portion that had fallen, and that some people had actually passed away because of it. They were driving along, and all of a sudden the bottom drops out from underneath you, and you can't stop in time, and you go over the edge. But even worse was the Cypress structure on the Nimitz Freeway doing the pancake thing, and people being stuck in traffic, and all of a sudden, if you could imagine the horror as the shaking begins and the upper deck above you starts to fall on top of your car. And all the lives that were lost and the injured people in that whole scenario. So earthquakes are a serious thing here in the state of California. They don't happen very often at that size. However, it's something that kind of looms over the top of our heads. And so that's why the topic of today's conversation. There was $162 million in damage, and approximately 12,000 homes were damaged during that Loma Prieta earthquake back in 1989 that measured at 6.9. So it's still less than 8. And so if you can imagine with one more point on the Richter scale, what that would do as far as the damage that would happen in this Bay Area that we live in. So there's the rub. Okay, so there was 12,000 homes that were damaged. However, there were thousands and thousands and thousands of other structures that had minimum to minor damage in the Bay Area. I know for myself, my parents' house didn't suffer any damage, whereas people in Santa Cruz had a lot of damage. There were parts of San Francisco that were completely destroyed, and there were various minor other damage issues going on around the Bay Area itself. And what's may not be known to a lot of people out there, and you may not know this as well, is that the real estate market took a heavy hit during '89, during the Loma Prieta earthquake. If you can imagine that you're in contract to buy a home and the earthquake hits, all of a sudden everything stops. For one thing, you know, infrastructures may be down. People are running around trying to just get their feet back underneath them again. But banks were requiring that there be new home inspections done for homes that were actively pending and in contract for sale. And then some homes had to be pulled off the market in order for them to be repaired before they could be listed for sale again. And it caused a 6-month ripple in the real estate market when that '89 earthquake hit. So that's a little small anecdote that a lot of people don't really think about. It affected a lot of purchases in the Bay Area, and sellers and buyers were affected together. So with that information, though, that is the rub. Is it worth having earthquake insurance when your home could be one of the 12,000 that were damaged in an earthquake like a Loma Prieta, or one of the many other hundreds of thousands of homes in the Bay Area that had little to no damage at all? So as we wind up, that's what happens when you try to say wind up and round up in the same sentence. It's the same word. You get some weird hybrid. But as we wind up this portion, this segment, before we go to the commercial break and pay some bills, we're going to come back and get into what is earthquake insurance exactly, and how is it paid for, what does it cover, things of that nature that will kind of help us make this decision as to whether or not you, as a homeowner, should pursue earthquake insurance for your own home. So we're going to be back in about a couple minutes. We got about 30 seconds to go. And then when we come back from the break, we'll get into what is earthquake insurance, how is it calculated, what are the deductibles, what does it look like, and what are the pros and cons. And we'll see you in a minute. Hey everybody, we're talking about earthquake insurance. If you're listening to me on live on Instagram or on Facebook, this show will be recorded and archived on my Hearts and Homes page. So if you want to listen to the information again, feel free to look for me on Facebook at heartsandhomes.com. And eventually here, I'm going to start recording these shows and loading them up onto YouTube so people can view them as well. So luckily, we're live in studio. And or you're live and you don't have to listen to the commercials, but this is being recorded for air in a couple of weeks when it'll be aired at 8 a.m. on KFAX 1100 out of San Francisco. And you can also find KFAX on iHeartRadio. So if you want to listen to the recorded show, quote unquote live on the weekend, look for me in a couple of weeks. But we're going to spin this back up, and I'm going to start recording this show again and dishing more information to y'all about earthquake insurance. It's kind of a mystery. I didn't really know that much about it either until I started looking into it for today's show. So I'm glad to be sharing the knowledge that I learned with you. So my man behind the glass, Billy Joel, is going to spin me back up and give me some bumper music that you guys can't hear. But that's okay, because we just do what we do. Right, baby? Yeah. Come on. Here we go. Hey everybody, welcome back to the show. This morning we are talking about the big one, and should you have earthquake insurance, and how to prepare your home for such a catastrophe. You know, before we went to the break, we kind of looked back at what happened in 1989 at the Loma Prieta earthquake and the damage that it caused and how it relates to you today in your decision on whether or not you should acquire earthquake insurance. Back then, there was $162 million in damage and approximately 12,000 homes that were damaged throughout the Bay Area because of that 6.9 on the Richter scale earthquake. So there's the rub. Is it worth having earthquake insurance when your home could be one of the 12,000 or one of the hundreds of thousands that had minimum to minor damage? So does it make sense? So what we're going to do in this segment is we're going to jump into what is earthquake insurance exactly, okay? There's mystery to it. People hear about it all the time, but until you really look into it, whether or not you want to buy it, you probably don't have much exposure to how it all works. So let's dig into that right now. First of all, I want to give a shout out and thanks to the Insurance Information Institute. I pulled a lot of this information in regards to what is earthquake insurance, how the rates are calculated, and what the deductibles are off of that website. So if you want to look it up for yourself, that's insuranceinformationinstitute.org. Again, that's insuranceinformationinstitute.org. III.org, III.org. That's right. There you go. All right. So why earthquake insurance, right? Earthquakes in the United States are not covered under standard homeowners or business insurance policies. Okay? That's just a fact. If you have a standard homeowners policy, earthquake insurance does not, earthquake damage is not covered. So the damage from the shaking and rattling of your house by the moving of seismic activity. So earthquake insurance is specific insurance that covers damage related to an earthquake event. Coverage is available either in the form of an endorsement or as a separate policy for homeowners, renters, and small business owners, okay? So what does it mean by endorsement? Well, it's like a rider to your standard homeowners insurance policy. So for instance, if you have, lots of expensive jewelry in your house, you bought your wife the 25-year diamond ring that she's always wanted, and it's worth, $10,000 to $15,000. Your standard homeowners insurance policy probably is not going to cover it. You can call your insurance agent and ask for an additional rider to be added to your insurance policy or an endorsement specifically for other items that you want insured in your home. So that would include valuable items, antiques, jewelry, and earthquake. So, or you can get a separate policy. Okay, so then, I already told you about III.org. I gave them credit. I got ahead of myself in my notes. So let's go on. Okay, unlike flood insurance, earthquake coverage is available from private insurance companies rather than from government, all right? So flood insurance comes from the government, earthquake insurance comes from private entities. Coverage for other kinds of damage that may result from earthquakes, such as fire and water damage due to burst gas and water pipes is, and I want to say is, provided by standard home and business insurance policies in most states. Cars and other vehicles are covered for earthquake damage by comprehensive insurance, which also provides protection against flood and hurricane damage as well as theft. Homeowners in the West are most likely to have earthquake insurance, with 14% saying they have coverage, followed by the Midwest at 7% and the South and Northeast at 6%. So that goes that kind of fits, right? Because on the West Coast and the Pacific Northwest, we have more seismic activity than the rest of the country. And so you're going to see a higher percentage of people that will sign up for earthquake insurance. And what's interesting to note is that if you have a water pipe or gas line that snaps and breaks due to earthquake and it causes a fire or water damage, your regular coverage will cover it. But say, for instance, there's no fire, there's no gas line break, there's no water damage, and your house just gets shaken apart to the ground, your regular homeowner's insurance policy will not cover the damage to your house from an earthquake. So there is the gamble that we're all taking. I would say at 14%, that's not very many people in the state of California or even on the West Coast that actively have earthquake insurance policy. So you're basically taking the risk that if a major earthquake happens, that your home will be okay and that you do have the necessary savings or money in the bank to cover damage from an earthquake that needs to be repaired because your general homeowner's insurance policy does not cover it. So let's jump in to what is the cost of earthquake insurance. Okay, so this is the big deal for most people. They want to know how much it costs and whether or not it's worth having. The cost of earthquake insurance is calculated on a per $1,000 basis. Okay, so it's calculated again on a per $1,000 basis. The cost can range from $1 to $10 depending on the risk of earthquakes, where your home is located, and the type of home being insured. So a brick home having more risk of significant damage, while a wood frame home has less risk. So let's do the numbers. So if you live in a high-risk state like we do, California, in the Bay Area, and the rate is, say, $3 for every $1,000 worth of coverage, and your home is worth, say, $700,000, your annual premium would be $2,100 annually, or $175 a month. So again, what you do is there will be a rate per thousand that the insurance company will set based on, one, where your house is located seismically, two, what type of house is being insured. So those two factors. If you have a wood frame structure that is built to kind of to sway back and forth or withstand the shearing forces of the earth moving, then the earthquake rate of insurance is lower. If you have a house that basically crumbles easily when the earth moves, then the rate would be higher. So our example set a rate at $3 per $1,000 of value of your home. And if you have a $700,000 house at $3 per thousand, that's 3 times 700, that would be $2,100 a year, or $175 a month. Now, if your house is, say, a high-risk house and it's somewhere around $5 to $7, you can then do the math. At 3, it's $2,100. At 6, you would double it. That's $4,200 a year. And then at $175 a month, you double that, and it's $350 a month. So it can get expensive. You know, it's basically a car payment if you have another car payment to have on your house that you may or may not ever use. So let's jump into the next piece of how earthquake insurance works. We looked at the cost, and now we're going to look at the deductible. Okay, so earthquake insurance carries a deductible, and it's generally in the form of a percentage rather than a dollar amount. Billy Joel says I got 2 minutes, so we're going to try to get through this, and if we can't, we'll just come back to it after the break and go through it again. So, earthquake insurance carries a deductible, generally in the form of a percentage rather than a dollar amount. Deductibles can range anywhere from 2% to 20% of the replacement value of the structure. This means that if it cost $100,000 to rebuild a home and there was a 2% deductible, you would be responsible for the first $2,000 of repair. Okay? So let's just go through that one more time. It's based on a percentage. If the percentage is 2% and the cost to rebuild the entire home is $100,000, your deductible at 2% would be 2% of that $100,000, or $2,000. So let's try to get it more into terms of what it would cost to rebuild in the state of California. How much time do I have left? 5 seconds? 45 seconds. Okay, so we're not going to be able to get into the detail of what this actually looks like for an average house in the Bay Area. But when we get back from the break, we'll calculate that number so you can kind of see in comparison what your deductible would be for what you're going to be paying for an insurance cost should you decide to purchase earthquake insurance. And we'll be back after the break. Okay, everybody who's on Instagram Live and Facebook Live, I'm recording my radio show live in front of you today. It will be airing in a couple of weeks on KFAX 1100 out of San Francisco. If you're not local, you can catch it on iHeartRadio. We are talking about earthquake insurance. We just spoke about what the cost is and how it's calculated, and we were just jumping into what your deductible is on earthquake insurance should you decide to purchase it. So if you stick with me, we will continue to go through this and you can gain some more information. If you can't stay for the entire program, I will save this video on my Facebook account at heartsandhomes.com, Hearts and Homes on Facebook. So that's HeartsandHomes on Facebook, Hearts and Homes. I tried to get Hearts and Homes when I first got into real estate about 15 years ago, and it was taken. So I settled for Hearts and Homes, and that's just the way it is. So, you know, you can find me, and if you can't, send me a direct message on Instagram, and I'll point you in the right direction. Okay, so we're going to get back to recording the show that will air later on the radio, and then also I save these shows for podcasting, and you can find me on realestateconnectionradio.com. That's realestateconnectionradio.com, and find all of my past radio shows, and you can get the information that you're looking for if it relates to other topics that you have not heard live. Okay, so we're going to get back going again. Ba-boom. Joel's going to spin me up on the other side of the glass. Hey everybody, welcome back to the show this morning. Maybe you're on to cup of coffee number 2 or 3. I personally can't drink that much. I get the jitters. But there are some of my people that are coffee fiends and just drink all morning long. And I hope you're enjoying your beautiful, beautiful, beautiful Saturday morning. And we're going to get back into earthquake insurance. We were talking about the cost of earthquake insurance and how it is calculated. And now we are dug into the other side of the deductible. So we had just gone through an example where if you had a deductible where the cost to rebuild was $100,000, and we had also said that earthquake insurance carriers, the deductible is calculated based on a percentage anywhere from 2% to 20%. So in our example, we used 2% as an example for the deductible, and we used a cost of rebuilding at $100,000. So if you have a cost to rebuild at $100,000 and a 2% deductible, then 2% times 100,000 would be $2,000. So before the insurance kicks in, you would be paying the first $2,000 of damage. So if there wasn't damage beyond $2,000, the insurance wouldn't cover it. So let's get into what the rates are in a high-risk state like California. Sorry, the deductible. What the deductible looks like in a high-risk state like California and in the Bay Area. So insurers in states with higher than average risk of earthquakes often set minimum deductibles at around 10%. Okay? So I'm going to say that again. Insurers in states with higher than average risk of earthquakes often set minimum deductibles at around 10%. In most cases, consumers can get higher deductibles to save money on earthquake premiums, okay? So that's a given. That even is true with your car insurance premiums. If you want a higher deductible, then it's going to cost you less money for your insurance premiums. So in California, if at a deductible of 10%, for a house valued at $700,000, that deductible would be $70,000. So you would be required to pay the first $70,000, and then insurance would cover the remaining damage. So that's a lot of money. So that weighs heavily on whether or not you're going to purchase earthquake insurance. Because if you have minor damage to your home, even if it's a chimney that falls down, maybe it won't cost $70,000 to replace it or even just take it out. You know, we're talking about major damage when we hit that $70,000 threshold. So the other interesting piece is that California law requires homeowners insurance companies to offer earthquake coverage to their homeowners insurance policy holders. So homeowners can decide to purchase a policy from another insurer or decline it altogether. So you do have the option in California because it's state mandated. So that's a good thing. So if everyone decided to buy it, I'm sure the rates probably would come down. But since there are so few at 14%, we're seeing a higher rate and higher deductibles. And so that's definitely going to weigh into whether or not you would decide to purchase earthquake insurance. Because $70,000 is a lot to cover before earthquake kicks in. And you have to look at, you know, whether or not you have a high mortgage or a low mortgage, what your savings account balances look like, what your 401k balances look like, and other investments. Do you have liquidity in your personal finances that could cover a hit like that, where it would make it worthwhile for you to have earthquake insurance to pay for the remaining damage? And we're probably talking about something very catastrophic, where the ground shook and your house just really came to the ground and it needed to be rebuilt. And in that instance, the $70,000 seems like just a small drop in the bucket compared to a rebuilding cost of maybe $600,000 or $700,000. So let's talk about the California Earthquake Authority. And the reason I'm inserting this in is because California has its own little entity that provides earthquake insurance. And since we're dealing with a high-risk environment of California, it's important that I share this information with you as well. In January of 1994, when the Northridge earthquake, a magnitude 6.8 quake, struck Southern California, causing an estimated $25.6 billion with a B dollars in 2017 and insured losses, the insurance industry ended up paying out more in claims for this quake than it had collected in earthquake premiums over the preceding 30 years. That's a long time of collecting earthquake premiums. They basically got hammered. Okay, so that's important to know. While no insurer became insolvent, some came very close. And this all comes to why we have the California Earthquake Authority. To recover their financial strength and to be better prepared for the next earthquake, most insurers began to limit their exposure to earthquakes by writing fewer new homeowner insurance policies. They're hedging their bets. They're trying to minimize losses, because insurance companies, like everybody else, is out to make money. Everybody's out to make money. It's not a bad thing, but whatever you're doing in life, you have to pay the bills. You want to feed your family, and you want to have a little bit extra to have fun or buy your toys or make further investments into your business, right? So everyone's out to make money. So they got hit hard, and so they reduced their policies in order to hedge against future losses or catastrophes. So in addition, most insurers filed for both rate increases and increases in deductibles from the 10% that was current then to a 15% or higher deductible percentage. So if you can imagine jumping another 5% on that $700,000, right? That jumps you up to a $100,000 deductible on a $700,000 insurance deductible for earthquake insurance. That's a big jump out of the pocket of the insureds. So it caused a crisis in the industry, right? So this triggered a crisis that by mid-1996, threatened the vitality of the state's housing market and stalled the state's recovery from recession. Okay, so I continue to read the history. In 1996, the California legislature established the California Earthquake Authority, the CEA, as a publicly managed, largely privately funded entity. The CEA is now the largest provider of earthquake insurance in the United States, with more than 1 million policies in force in California at the end of 2017. So basically, the state of California stepped in and established a private entity to make sure that us Californians would have access to earthquake insurance. And then they began to sell it across state lines, and now they're one of the largest earthquake insurance providers in the United States of America. All right. So the standard CEA policy, or the standard California Earthquake Authority policy, includes a deductible that is 15% of the home's replacement cost. So there you go, 15% of the home's replacement cost. So what is that, $15,000 per every 100,000? That's a lot of money. It adds up quickly. Okay, so that goes also into your determination as to whether or not it's worthwhile for you to purchase earthquake insurance in the state of California. The basic policy covers only the house, okay? Other structures, such as garages, pools, etc., are not covered. Personal possessions, let me say that again, personal possessions are covered up to $5,000 and loss of use expense. The additional cost of living elsewhere, okay, so you may have to move out while your home is being repaired. The additional cost of living elsewhere while home repairs are made are covered up to $1,500. I got to tell you something, $1,500 does not go a long way when you have to move out of your house and live somewhere else, especially in the state of California, when you're looking at monthly rents of upwards of $33,000 to $3,500 a month. Well, I think that's it for this segment. I think Joel's playing the background music, so we're going to come back and we'll finish talking about the CEA. We'll see you in a little bit. I hope you guys on live are finding this very helpful. I'm just going to check a text message or two for a second. Blah, 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 blah. All right. So we are going to get back into this. Joel, where are we at? How many more segments do I have? Okay. Oh, well, we got plenty to cover. So let's get back into it. We're going to talk about the California Earthquake Authority and what it costs to get earthquake coverage from them in the state of California. And then we're going to talk about the pros and cons of earthquake coverage. All right, we're going to jump back into this thing all right now. Hey everybody, welcome back to the show. Thank you for joining me this morning as we're discussing the topic of the big one, and should you have earthquake insurance and how to prepare your home. So, welcome back. So we were talking about how the California Earthquake Authority was established. Basically, insurance companies took a bath heavily back in 2017. I'm sorry, it was in 1994, sorry, that they took a bath, and it was $25.6 billion in 2017 dollars. So I misspoke earlier in that. I'm correcting the record. In 1994, the earthquake of 6.8 really hurt the insurance industry. The insurance industry paid out $25.6 billion with a B in dollars that if it was paid out in 2017, it would be valued at $25.6 billion. So basically speaking, insurers got really scared to issue insurance policies for earthquake in the state of California, and they wanted to raise rates, and they didn't want to give earthquake policies out. And so that led to the formation of the California Earthquake Authority, and we were speaking about what they do as far as issuing earthquake insurance in the state of California and what the cost is for earthquake insurance from the California Earthquake Authority in the state currently. So the standard CEA policy, I'm sorry, not currently, as of 2017. So if you want to know what the current amount is for the policy for CEA, I would contact your insurance provider or contact the CEA specifically. But this was as of 2017, which gives you an indication of what the cost is currently today, because I'm sure it didn't go down. So the standard CEA policy includes a deductible that is 15% of the home's replacement cost. So that's a lot of money. And the basic policy covers only the house. Okay, so we're getting into that as well. It does not cover structures such as garages, pools, and etc. Okay, personal possessions are covered up to $5,000 and loss of use expenses. The additional cost of living elsewhere while home repairs are made are covered up to $1,500, which I was saying in the previous segment is not a lot of money, as it is very expensive to find housing, especially in the state of California, where rents are on average around $3,000 a month. So recognizing that some people want more comprehensive coverage, the California Earthquake Authority also offers a 10% deductible insurance for other structures, personal items covering up to $100,000 and $15,000 in loss of use coverage. Premiums vary widely among the 19 rating territories based on the type of house, its age, the nature of the soil, and proximity to known fault lines. The California Earthquake Authority has reserves of about $9 billion. So they're solvent. They have money to pay out claims, but given how expensive it can be when an earthquake hits an area and it has a large amount of devastation, that money could go out the door very quickly. It just can. So, you know, sometimes I think about earthquake insurance like this. The more of us that don't have it, and if all of our houses fall down in a major earthquake and it's not by gas or fire, I'm sure the federal government would probably come in using our own taxpayer dollars to help us out and give us back our money that we gave to them to help us out. Maybe, maybe not, but natural disasters do occur. But it's an individual choice as to whether or not you want to take the risk, roll the dice to either have it or not have it, because having it is expensive and not having it is expensive. Again, with the deductibles being at 15% of the value of the home, and your homes on average in the Bay Area ranging from $700,000 to $1 million, the deductible itself is a big chunk of cash. And you would need to plan and save and have that set aside just in case of an earthquake. Otherwise, the earthquake insurance is basically useless because you have to be able to cover the first 15%. So we jumped right into, in a nice little transition segue here, the pros and cons of earthquake insurance. And first of all, I need to give credit to Mila Arujo from thebalance.com, because she wrote a very nice article on July 1st, 2019, outlining for you what the pros and cons of earthquake insurance are. And so I have taken notes from her article to review with you guys. Okay, so pros of earthquake insurance. If your home is damaged by an earthquake, you will be covered. I know it sounds pretty straightforward, but it is a big deal, right? Rather than losing everything or having to borrow money or more money to make your home livable, right? That's the benefit. If you lose everything and you don't have any coverage, you're gonna have to borrow a bunch of money to rebuild your house, right? So in lower risk areas, the cost of earthquake insurance is lower, right? Because it's up where it's high risk and it's low where it's low risk, and you won't be paying the kinds of premiums people pay in high risk areas. So if you find that earthquake insurance is only $20 a month, then it's probably worth having, but then it's not worth having at the same time because it's low risk. But you do have peace of mind knowing that you have the coverage and you don't have to come out of pocket so much for replacing your property. The other thing that you have to be concerned about is if you have a mortgage and your house is shaken to the ground and there's no fire or water damage outside of just the house being uninhabitable, your mortgage company is going to require you to keep paying your mortgage payments. So having earthquake insurance brings you peace of mind that you won't have to still make mortgage payments on a house that you can't even live in because you know it's going to get rebuilt from the insurance that you have. So that's another piece that you need to take into consideration when making the decision whether or not to purchase earthquake insurance. If your mortgage is really low, you've been in your house 25, 30 years, and you're only paying about $1,000 a month, then maybe it's not such a big deal. But if you just bought your house in the last 5 years and you have a mortgage of $700,000 to $1 million and you're making $4,000 to $5,000 a month payments, and an earthquake hits and destroys your property, that's a big financial hit to your bottom line. It could cause you to go into foreclosure because why would you want to make payments on a house that you can't live in and you have no way of rebuilding? So it can really devastate people overnight. So that's the big question. You either have more bills to pay your insurance premiums, or you could be financially devastated by an earthquake if you don't have the earthquake insurance. So let's go through what kinds of damage an earthquake does cause. So you may have partial to total destruction of a building. You may have a building collapse. You may have structural damage to buildings that create dangerous circumstances and require repair. You may have damage to other property and landscaping. There could be explosions, fires, gas leaks, landslides. If you're living in the hills, I know in Santa Cruz they did suffer that. Roads were wiped out because of landslides and because of other things. Avalanches, flash flooding if you're on the coast, or tsunamis. So the cons of having earthquake insurance. In some states, mainly those with highest risks, earthquake insurance can be costly. You have to decide if it's more likely that you will suffer from paying the high price of earthquake insurance versus taking the risk that an earthquake will not destroy your home. Even when you have earthquake insurance, you will have a high deductible to pay relative to the deductible on your regular home insurance policy. The deductible for earthquake insurance is often a percentage, right? We already talked about, and we know from the CEA that it's 15%. All right, so that's a lot of money. So the piano man just told me that we're at 2 minutes. How much time we have left? I've got a minute. So when we get back from this final break, we're going to get into protecting your home before an earthquake hits. I've given you basically everything you need to know to decide. I would call your insurance provider to find out what exactly your rate would be, the dollar amount per thousand, and exactly what the percentage is on your deductible, and do the math for yourself and your own property. But it's a lot to think about, and know that you should look into it. You should absolutely look into it and make the decision and then plan for either having it or not. When we get back from the break, we'll talk about how to protect your house should an earthquake happen. All right, we'll see you in a bit. All right, everybody. We have gone through most of the meat on this question in regards to whether or not you should have earthquake insurance. And we're going to jump into how to prepare your house, home preparedness for an earthquake. There's just a couple of go through, and then what you should actually have on hand, just in case we do have a major earthquake. I'm going to just go through the earthquake safety checklist that's provided by FEMA. And it was printed in November of 2017, and you can find it on FEMA's website. Just type in earthquake preparedness in your browser for whatever internet browser you use, and it will pop up, and you can find this pretty easily. It's something that you can print out for yourself and go through. This is what it looks like. Safety checklist. It's pretty comprehensive for all my people on IG. Earthquake safety checklist. It's pretty comprehensive. It has some really good information. It's super easy to print out. Probably good to have at your house and just kind of go through. All right, so we're going to jump back into the show and wrap up our last 5-minute segment. So we're just basically going to touch on this just a little bit and then wrap it up. And then I'm just going to thank you guys for joining me today. All right, so here we go. The piano man behind the glass. Hey everybody, welcome back to the show. We're going to wrap this thing up in this last 5 minutes, and we're just going to kind of quickly touch on some things that you can do to help yourself out before an earthquake hits, whether or not you have earthquake insurance or not. First of all, check to see if your home is properly bolted to the concrete perimeter foundation. That's called remediation. If you don't have a foundation that's seismically reinforced for earthquake, you should get that done. It could save you lots of money, keep your house from sliding off the foundation. Most houses are already built that way because of, most newer homes are built that way just because of building requirements in the state of California. But if you have an older home, say something with a basement and that era, you will probably want to double check to see if your house is seismically safe. Also, have your chimney inspected. If you have an old brick chimney, an older 1970s style, they're absolutely beautiful. Love to see them out there as a realtor, and I'm showing property and we're looking at fireplaces. Those brick chimneys are fantastic, but they tend to fall down in earthquakes. So I highly recommend you have them inspected every couple of years just to make sure that they're seismically sound. In case we do have an earthquake, you want to make sure that they don't topple over. And then check to see if you have any major gas lines running through your property and know where they are located. Talk to PG&E. Make sure that they've been properly maintained by Pacific Gas and Electric. We don't want an earthquake to happen and then all of a sudden a spark from a rumble or a grumble down there, or something happen that causes a major explosion in your own backyard or underneath your house. I would talk to PG&E about that, see if there's anything running through your property and make sure it's being properly maintained. And then also have a gas shutoff wrench to turn off your main gas line to your home right there at the main gas line. That's something you can do. Go down to Home Depot or Lowe's and pick one up. They sell them. Just ask anybody in the store. They'll point you in the direction. Have that on your primary gas line outside your home so that you don't have to go running around looking for it should you have an earthquake or should one happen. Also, you'll want to go online and type in earthquake preparedness or California earthquake preparedness, and you'll see something pop up from FEMA. It's called an earthquake safety checklist, and you can download that from FEMA. It's a really nice booklet that you can grab, print, and go through it with you and your family, and just know what types of things. Emergency phone numbers for everybody in the house, where they're located. Everybody has cell phones now. You're going to want to know everyone's numbers. You're going to want to get two-way radios if you can, just in case the cell tower signals go down. Have plenty of water also. You're going to want a transistor radio also. Radio waves are still free. We tend to do a lot of listening on our phones of different stuff now. But go get yourself a transistor AM/FM radio and make sure you have batteries for it so you can get information should the cell networks go down on us. Flashlights and water. You need to have flashlights and water and batteries. Try to get those newer flashlights that can be recharged via solar or even cranked. They can also be used to charge your electronic devices. There's some really nice ones out there that you can grab. So go ahead and do that. Also, you're going to need to have a good first aid kit on hand, fire extinguishers, and if you have special meds that you have people on in your house, make sure you have extras available. And tools, pipe wrenches and wrenches to turn off water and gas, and have some spare cash in the house because those ATM machines are going to go down, and if you need to buy something in an emergency situation, you're not going to be able to run to the bank and grab money. So have a little box laying around with some cash in it, at least a couple $100. I generally say have $1,000 in cash in the house at all times if you can afford to do so. Have your pet needs and supplies available for your pets, and know how to turn off your breakers in your junction box in your house so you can avoid electrical fires. Go out there and turn them all off if there's a major earthquake, and just get the electrical shut down. Be prepared. Nowadays they say not to hide underneath tables because things fall on them. We're supposed to actually stand in the doorways because it's reinforced structurally, and that keeps things from falling on your head. Don't dive underneath tables because if the table's not strong enough, you could be crushed. And that's it. I thank you for joining me on today's show. If you have any questions about what we spoke about, let me know. If you have any topics that you'd like to hear from the show, let me know. I'm at realestateconnectionradio.com or 408-472-0817. Thank you very much. Go out there, be safe. Whether you have earthquake insurance or not, prepare, 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 because you always know it might be around the corner. Dun, dun, dun. And we'll see you next week. Thanks for joining me this morning. Okay, everybody, thanks for joining me this morning. I'm out of here from the live feeds. I won't be doing this next week as I will be away with my bride, having a good time, and I'm taking Wednesday off from broadcasting live. And so we'll see you the week after next. Thank you so much for joining me again. And this will be recording will be live. Will be archived on my Hearts and Homes page on Facebook, and you can go back and listen and watch again. So thank you very much, and I am out. Have a super fantastic day. God bless you, and God bless the United States of America. Talk to you later. Bye-bye.